Are house prices ever going to crash?
Let's face it, it's pretty easy to make an argument for why this whole thing should have come tumbling down by now.
Is the UK housing market going to crash?
The question, are we about to see UK house prices crash?
Why didn't house prices drop in 2023? Where was this big crash that so many were expecting? Is it going to happen in 2024?
If we combine the cost of living crisis, soaring interest rates and sky-high prices, it seems as if the UK housing market is set up for a big crash.
The UK mortgage and housing market is in trouble.
In this video, we'll be breaking down the data and trying to establish if the housing market is ever going to crash. Here are the essential statistics for this year, sourced directly from the estate agencies at the forefront. We have 6 straightforward numbers that illuminate our trajectory. Merely observing these numbers might already prompt you to speculate whether the market is on the brink of a crash. In this video, we'll avoid hasty conclusions. I'm going to break down the data into 5 critical sections, allowing you to determine the property market's future. The sections we'll explore include number 1, the economic outlook, number 2, house prices in the UK, number 3, demand for buyers, number 4, supply from sellers, and 5, the total volume of properties sold. With this information, you'll be equipped to make a well-informed decision. Additionally, I'll share strategies on how you might safeguard your investments and possibly profit if house prices plummet. After all, it's prudent to prepare for the worst while hoping for the best. Understanding this is crucial to me. I've dedicated the last 7 years of my life to building an established property management company, as well as my own personal property portfolio. This gives me access to insights and information that you might not have. Making accurate predictions is essential for mine and my clients' success. Let's dive into it, and don't forget to like and subscribe, as it really helps me out. Section 1. The economic outlook. As we know, the Bank of England's interest rate has been high yet stable all year at 5.25%, significantly higher than in past years. Though interest rates are not the sole driver of inflation, we observe that inflation has been declining. The costly borrowing is easing slightly, which in turn reduces our overall spending capacity. This reduction is an unfortunate consequence of the government's alleged solution to inflation. Adding stress to the economy at large, we can see that although the gross domestic product has seen a slight recent increase, the overall trend has been downward. Consequently, the rate of insolvencies, particularly among businesses, including property-specific companies like estate agencies, is on the rise. An increase in estate agencies going out of business signals a contracting market overall. Section 2. UK house prices. Despite the significant economic challenges, UK house prices haven't plummeted. They've actually seen a marginal increase. However, looking at the annual trend, the situation differs. House prices have generally declined year on year. When adjusted for the high inflation experienced over the past 12 months, real terms show a much more substantial drop than the headline figures suggest. Notably, when breaking it down by country within the UK, England has seen prices drop over 2.5 times more than the UK average, while Northern Ireland and Scotland have experienced reasonable growth in house prices over the last year. Section 3. Buyer demand. Estate agents are registering more buyers per branch than at the end of last year, though there's still a significant decrease compared to previous years. There's a persistent downward trend in the number of market buyers. While these figures might increase in the coming months, the average number of viewings per property continues to decline, suggesting less competition for available properties. This decrease in buyer activity is likely contributing to the slowing growth in house prices. The declining trend in mortgage advances aligns with this observation, although the numbers are still higher than the lows of Q2 in 2023. Section 4. Seller supply. We're observing an increase in the number of new listings per estate agent branch, matching or exceeding previous periods. Overall market inventory is also on the rise. More properties are entering the market, and more are available overall. However, the reasons behind this trend are somewhat concerning. Looking at the number of people who report struggling to pay their rent or mortgage, we see an increase in trend. Moreover, the number of properties falling behind on mortgage payments continues to rise. Section 5. Volume of property selling. Fortunately, despite there being fewer buyers, the average number of sales agreed per estate agency branch appears to be roughly in line with last year. However, the true cost of the growing number of properties entering the market and a slight reduction or stagnation in buyers means that the percentage of properties selling below the asking price is rising, having been all through last year at only 15% of properties selling at asking price. Lastly, Section 6. How to survive in what is effectively a buyer's market right now. If you don't need to sell, wait for the market to improve. If you must sell, try to make up for the likely lower sale price with the tips I'll provide. If you're buying, aim to purchase below market value. Also, consider adding value to any property you buy by modernising or adding square footage. I hope you found this video useful. If you have, please remember to like and subscribe, and as always, I'll see you on the next one.